And stacking up, Joe Cusick of the Cusick Group is with us now to talk about some hot plays that he's noticing. And Joe, love having you on the show. Let's talk about JC Penney. Yeah. This is a retailer that has just been trying to have a breakout moment and become popular again. What's the options market indicating about this store?
Well, there's a couple things. First of all, fundamentally, last week there was news that came out that they're going to do cost cutting. Now, while the normal viewer looks at that and goes, that's a negative, for Wall Street and for analysts and for advisors like myself, that seems to be a positive because we see that they're trying to balance out the balance sheet, improve the ability to do business.
That is the name of the game. What's great for Wall Street is usually bad for Main Street.
Right.
So here we go.
Right.
Wall Street's loving this.
Wall Street is liking this. The stock is trading right around 840. It was down a little bit last week. We still see that challenge to get it up into that $10, $11 mark. But what's very interesting is that they have earnings next week on the 13th. That's when it's scheduled right now.
Okay.
I saw an interesting trade that happened where about 10,000 of the June expiration cycle, $8 calls traded for 96 cents.
Okay.
This is showing that there's conviction potentially to the upside.
They need that stock to get to $10.
Correct. They need it to $10, and right now, up to the event next week, next Friday, the options marketplace is actually pricing in the potential for the stock to move either up or down about $1.40. So there is some potential volatility in this.
Potentially.
It could be a mover. They're giving themselves some time using the June expiration, so it's about 30 days. So it's very interesting transaction. I want to keep an eye on that because especially going into a binary event, they have a catalyst that could move the stock, and in this case, they want it to the upside.
Let's move over to the tech sector with a name that I don't tend to talk about. I know it's new to your radar as well. Click Technologies. It's called Click.
Yep. Quick.
QLIK.
QLIK is the ticker symbol.
Cute.
There you go.
What's a data company, right?
It is a data company. It's data analytics. So if someone goes and clicks on a website, they'll infuse the technology, interlay the technology that's going to pick up on those clicks. So with that being said, you can see that it could get it has a value add to anyone that has an online business, and you know everybody's online now. As you know very well. I actually saw what would be considered a largest trade. It's around 3,200 contracts traded on the June expiration, the $31 calls. Now they traded for $1.70, so with the stock trading right around 30 and some change, almost $31. This was a very interesting play because there is no catalyst that I saw out there other than the headlines and the bullish sentiment that's being reflected with this activity. So
maybe somebody knows something, or they're just know something, or speculating. Let's put it in those words because we really don't know. But they're looking for a nice maybe $1.50 to $2 move here, Joe.
They're going to need at least a $1.50 move to break even into June. The thing that's interesting, Angie, is that between now, when we're talking, and into the end of next week, the options marketplace is actually pricing in the potential for this stock to move about $1.92 either up or down. So this is a mover. And now this stock does have decent volume. It has over 1 million average shares traded every day. So this is the type of activity that says that the bulls are still in the game, that they're still interested, that there are institutional, retail, and advisor participants that are looking at the market, but they need to have fixed risk over a specified period of time. That's why it looks like they're utilizing options rather than buying the stock outright.
Finally on your list, let's take a look at Freeport-McMoRan. This is a stock that was what, $4?
$4 in January.
Trading around 11
and some change to date. And
huge move.
It's a huge move. It has been resurrected. You know, in January and February, the talk was it's going out of business.
Everybody hated this stock.
Hated it.
Now they love it. But for how long is the question?
Well, that's interesting. And really, there was kind of a line drawn in the sand with the activity I saw last week. I saw about 1,500 of the June $9 puts being traded. They paid 39 cents. Now, with the stock, again, trading almost close to $12. It came off of those highs that we were seeing for the year so far that they traded last week. This could be a hedge. As a matter of fact, I believe it's a hedge from someone that had been buying stock basically either at the $4, $5, $7, even $10 range where it kind of just consolidated for a while in March. And now they're looking to basically put a little protection in if in fact miners, materials, something comes out of China any infrastructure type of rift comes into play, that could impact Freeport. This is the kind of activity you want to keep an eye out for, especially if you start to see put activity pick up. That could be a negative for the market in general, but specifically for miners, metals, materials.
Thank you as always, Joe.
You bet.